Good evening, everyone. My name is Paulie. I'm just going to walk you through a quick presentation of the housing market. Now, my goal is to look at housing starts. I'll look at the mortgage rules. I'll talk about household debt. Talk about issues facing housing. And I'll go into some of the issues and what's happening in the residential market as a whole. So, if we look at housing starts, this is a good indication here and tells you how the economy is growing too. Healthy housing starts means construction's up, people are spending money, and they're looking at buying, moving to their home ownership. So that's kind of how you want to do it. So what you want to do here is typically look at this, and you're seeing here that in December of 2015 our housing starts came down, but on average we're running about 200,000 units per year, which is still pretty healthy, and that's something to bear in mind as you're looking at things. The other thing too is the US seems to be rebounding as well, so you're seeing certain things down there too as well. They had the biggest huge bubble to do the 2008-2009 recession, where their real estate bubble hit them harder because of the way the mortgage rules work down there, and I'll get into those more specifics later on. Now, basically, over the last few years, the government of Canada has taken a lot of pressure, more so when Jim Flaherty was in office, around the mortgage rules. We used to have an amortization period of 40 years, so what basically did is all you're really doing is stretching out those mortgages. You're still paying more interest, but it allowed some people to get in the market where maybe they should not have been in that market for buying a house. So they changed the rules to kind of ease it into the amortization period back down to 25 years, and that's what you're seeing there as well. They also changed the down payment in February 2016 with a target to make sure that anybody over $500,000 wouldn't have to make more of a down payment on that. That's some of the things too. This was all kind of try to stabilize it, not put a lot of shock and awe into the market, but also put some controls around it to ensure that we weren't growing the mortgage debt faster than possibly it's affordable or the market could bear. And that's really what you're seeing with this graph, this chart. Now, there's a lot of myths you're going to hear now about household debt. And it's usually, a lot of it's a spin by government saying that household debt's risen. Yeah, it's out of control. Now, let's be realistically here. Typically how household debt is evolved, it's mortgages, it's loans, it's credit card debt, it's all the pieces of the puzzle that is part of the operational cycle. So when you look at a household, you're looking at from a mortgage to probably a car loan and probably some credit card debt and certain things as aspects of going forward. Now, what's not being told here is basically when you compare Canada to the US, we're not as indebted as the US is, and that's things that's not really discussed when you compare it to peers. They're also saying debt is rising faster, which is not necessarily true. We've actually seen that it isn't as growing as fast as people make you believe, and that's what you're seeing with this information as well. Now, basically, if you look at the whole nutshell of how the real estate market kind of evolved since 2006, you're hearing a lot about the subprime mortgages. You're also hearing a lot about how some financial instruments were backed by subprime. That was a bigger issue in terms of the US because the US banking sector tends to be not as regulated as much as Canada. Canada's banking sector is very strong. And it's not something that you're hearing here as well in terms of the overall capacity here in mortgages. And it's something you need to bear in mind too, is when you listen to discussion from government, is Canada's banking sector is very healthy. It's one of the best sectors in the world in terms of financial security and how it manages risks. Now, if you really talk about things, and when you talk about government may play it from the NDP or the Liberal government say that household debt is in crisis mode, it's not. We have 12%, maybe 1 of 8 families that could be in some sort of financial distress. That's not a big number when you compare it to other countries and other peers where we've seen some big blow-ups in Ireland, and we've seen some big issues in the US. Canada does a pretty good job of managing its mortgage rates. Now, are there issues? Yes. When you get into the metropolitan areas of Toronto and Vancouver, which are high areas, you're seeing people there that have ridiculous prices where we're seeing probably a potential where we're seeing 25-30% overvaluation of houses, and that impacts everything. And how that does that, I'll get into it further discussions as we move forward with the presentation. Now, I'll often ask questions, okay? Everybody blames the federal government in terms of the mortgage issues. Let's take a holistic view of how things work in the market. The idea is, idealistically, whoever's willing to pay for that house, that's the market price. That's fine. That's how we do things here with bids and asks. What's not being told is there's not enough pressure from banks on that valuation to make sure that valuation makes sense. So That's why you see comments made that the price of houses is 25% above that, because people are making ridiculous bids on that area. And it's something that you need to bear in mind. That the other thing too that comes into play, we have to take a holistic view from the banking side to the real estate side to government and to the educational system to educate people on cash management. That's never really discussed on any of the discussions between government. It's easy to blame the federal government because that's socialism. Socialism likes to say is I'll take care of you because you're too stupid to take care of yourself. And that's something to bear in mind when you listen to discussions on mortgages and household debt. Let's talk about the residential market as a whole. You're seeing more and more upgrades from solar panels, solar windows, security monitoring, efficient appliances. This is all part of reducing the hydro costs down as part of the overall cost of living. You're also seeing a lot of people turning their basements into rental properties as a way to kind of offset the higher mortgage costs, to kind of help them save money on their costs. So why did I do this presentation? Well, this presentation was done purposely to highlight the fact is that it's not one issue or policy when you hear about household debt. It's very easy to blame federal governments for the whole angle to fix something. The reality is they're not all part of the solution. Everybody has to be involved, from the school systems to real estate agents to the banks to the government. It's an all-angle policy. Too many people, when they listen to mainstream media, look at one angle of policy. That doesn't resolve anything, and that's something that when you kind of look at these presentations and go through the analysis, you need to kind of take a step back and take a holistic view of all possible angles, and that's how you're going to get a clear picture. This presentation is my view and perspective on the real estate market. It's not the only view that you should kind of review, but it gives you a good indication of where you should be going out to ask questions. Thank you.